Alright guys, so in today's video we're going to be going through some of the typical ICT setups that you can execute on. This PDF is going to be available in my free Discord. The link to that is in the description of this video. But without further ado guys, let's get into the video and let's talk about some typical or generic setups that you can take advantage of. Now, the important thing to consider is that these setups are not going to occur every single day. But when they do occur at least once or twice a week, they're really easy, right? So we're going to talk about someone specifically for the London session and the New York session today. Again, if you like these types of videos, guys, let me know. I believe this is either the 8th or 9th video in the 10 series free mentorship that I'm doing. And these are 10 things or 10 concepts that I've pulled from ICT and adapted myself. And again, guys, this PDF is available in the Discord, so the link will be in the description below. But let's get into it. So again, I just wanted to go over some generic setups. The first one, I just want to get straight into it, is what happens usually when price sweeps a previous day low or high. Right, so it's a very typical setup that often will form during the London session, because as you guys can appreciate, sometimes the London session forms the high or the low of the day. And when will this high or low form? When you sweep a previous day high or low, right? So have a look here. Price comes down and then sweeps this previous day low. It does it during a macro, just so you know. Now, we sweep that previous day low and immediately we have a reaction to the upside. Then we're going to zoom into this and try to find any entry opportunities that we can take advantage of. That's really important to keep in mind. And again, sometimes in these situations, you have to be nimble with price. So I think a big thing for a lot of people is demanding certain PD arrays to form. A PD array, or the unicorn model, or a fair value gap, an inversion, a BPR, an order block, it's an entry model. It's not a narrative, right? So the narrative is, where's liquidity, where's imbalances? Have we swept liquidity? Have we rebalanced the zone? The narrative is, where should price go and why should it go there? The entry model is the PD array that you use. So a lot of people get confused about that. Focus more on the narrative, building an edge in terms of a narrative, rather than just identifying a pattern on the chart, because patterns don't always play out without the correct narrative or without some kind of pushing of the markets to either sweep liquidity or to fill an imbalance. We'll start there, right? Now let's actually have a further look into this. I've marked out the sweep of the previous day liquidity with the red line. So if you have a look here, this here is your sweep of the previous day low. You guys can see that, right? Now I've marked out a few things. I've marked out a breaker block in blue. I've marked out a bullish gap in green. I've marked out the market structure shift, which I can probably zoom in and show you guys there. That's the market structure shift. And then the order block, right, which is this down close candle wedged in between these two green ones. Just so you know, any entry model is fine. You can enter here off the unicorn model. You can enter off an order block. You can enter off a bullish fair value gap, a typical 2022 model. You can enter simply off the creation of a breaker. So again, it's all about the narrative. Why should price retrace, or why should price reverse after sweeping a previous day low or high? And the simplistic answer is that a previous day low or previous day high, obviously it's from a previous day, right? So people might have orders sitting there. So you're going to trigger those orders, and you're triggering quite a lot of orders because it's from a previous day. A previous week, similar kind of thing. So if you see a reaction from a previous day low, previous day high, or a previous week low or previous week high, anticipate a reaction. And when you get that reaction, look for the entry models, right? Or the PD arrays to potentially enter from. Again, notice that after the sweep of the previous day low, we immediately react to the upside, and it occurs during silver bullet and inside the macro. I think it's the 350 to 410, or it could be the 250 to 310, but it occurs inside a macro. And as you guys know, that is solely what I trade. Now, looking at this, there's many ways you can enter. This is just one way that you could enter this particular trade. And you could wait for price to come up, retrace back down into this bullish gap, and put your stop loss, where do you put it? Below 3 PD arrays. And what are those 3 PD arrays? Before I get into it, in your head or out loud, say those 3 PD arrays. The 3 PD arrays that are supporting this entry and this stop loss. Bullish gap, or a busy fair value gap, an order block, a breaker block. There's no need in this case to put a stop all the way down here. There's no need. You could put it down here if you wanted to, but realistically, we've got more than 2-3 PD arrays supporting price. If we're really going to go up, we shouldn't expect price to come past that point. That's really important to keep in mind. And you could do that, right? A lot of people are concerned with risk to reward, 1 to 2, 1 to 3. You take the market, in my opinion, to where it makes sense for the market to go. And where does it make sense for the market to go? To this swing high that rests within an imbalance. So you're taking it to the low hanging fruit. If you don't, potentially you could be stopped at break even just to watch the price go in your favor. So take what the market gives you. I think it's a really important concept to keep in mind. And this is the first example, which is a sweep of a previous day low. You're going to see more of this again as we go through in the video. But let's get into the second example, which is using the Asian range or Asian liquidity to phrase a generic or a typical setup. You're going to see this happen probably at least once a week. Will it happen every day? No. But what you're looking for is you're looking for price to sweep either Asian buy side or Asian sell side and then react straight after. Again, if you can get this to occur either in a macro or silver bullet, that's what phrases the highest probability trade, because now you've got price, you've swept time-based liquidity, and you're in a macro or silver bullet, you've got price and you've got time combining together. You want that, right? That is what ICT means by time and price. It's as simple as that. Time comes from different candles, macro, silver bullet timeframes, or time-based liquidity, and price comes from what type of liquidity do you sweep, what type of liquidity are you targeting, is it low resistance, is it high resistance, and all the in-betweens that we're going to talk about in this example here. So if we have a look here, look at this, right? I've marked out the Asian sell side. Now, just for the purposes of this video, I class Asian liquidity as 7 o'clock to 12 o'clock, and this is in New York time, right? With daylight savings in Australia and different countries, the UTC value, don't worry about that. Set your charts to New York time, and you'll be fine, right? So even though I'm from Australia, that's what I set it for. And again, this principle will apply to everything, not just to futures, it applies to everything, right? It applies to Forex, gold, any instrument or any market. It's really, really important to consider and to keep in mind. Now, what I've done is I've marked out the range, like this is the high of Asian session, that's the low. And look what we do. Look what we do once we sweep Asian sell side. Just look at that. Look at that, right? Perfect reaction, quick reaction, and we're in a macro. Beautiful, 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 beautiful. So in the example below, or above I should say, notice how price comes down to sweep the Asian sell side and then reacts immediately after doing so. All we gotta do then, keep it nice and simple. You've swept your liquidity, you're looking for an entry model. If there's no entry model, there's no trade. If there's no drawn liquidity, there's no trade. If there's no imbalance or fair value gap or low resistance liquidity to target, there's no trade, right? Keep that in mind. The generic setups are good, right? And they're good to learn and to memorize, because when they come up, you can execute and take advantage of these trades. And not always, but sometimes we'll go to one side of the range and then the other side of the range. Doesn't always happen like this. A lot of people will tell you, yeah, you trade from one and then the other. Doesn't always happen, but if you want to take your 10, 15, 20, 30 handles in a situation like this, it's more than enough and more than permissible. If you want to hold a runner, you can do that too, but it's not always necessary. You take what the market gives you is what I'd probably suggest if I was starting again and learning these concepts, right? Keep that in mind. Now let's actually have a look at price action below. Let's actually extend on this. So have a look at price action below and you can see the reaction after sweeping the Asian sell side, right? So have a look here. That's your Asian sell side. We've zoomed in now, and you can see, right? Look at this, beautiful. There's your entry model from that inversion. But let's say you go, hang on a sec, Ruben, how can I trust it? We're inside a macro, keep that in mind. But if you still don't trust it, just wait. Wait for price to develop like this. Wait for the price to come down, sweep internal liquidity and tap into that bullish gap, and then use the next inversion fair value gap. Now you've got more confluence. You've got the fact that price is aggressively pushed up. You've got the fact that the macro has done this. Price has come down, swept liquidity, inverse this fair value gap. You can enter right from here with your stop below this low. And sometimes what I've noticed is that those second entries higher up in the move can have a tighter stop loss, right? Which then in the market conditions that we're currently having, where price is just ranging massively, it'll help you, right? It'll help you because realistically, you're not always going to get this entry. You're not always going to trust it. Sometimes you're going to be looking for more. But again, look at this. Accumulation pocket. That's a great drawn liquidity. But you don't even need price to get there, right? So you're just making sure, if you're still watching this video, you're just making sure that you've got liquidity to target. I'll tell this to my Discord students. You've got liquidity to target below your take profit level, at your take profit level, and above your take profit level. That way the market will pull, right, like a magnet to those liquidity points, and your TP should be hit or your break-even point should be hit, making it a risk-free trade. Keep that in mind. Again, the lowest risk entry in my opinion is from the second inversion fair value gap like we talked about, because price has already returned to a bullish gap. It's already pushed higher, it's already generated relative equal highs, it's already done all these things, and therefore you can place a tighter stop. It's just one of those things, right, that plays out time and time and time and time again, and you're going to see this play out. Now, will it happen every time? No. Sometimes you sweep Asian sell side, Asian buy side, and it doesn't work out, but it works out more often than not, and that's what trading's about. It's all about probabilities, guys. It's really, really important to keep in mind when you're trading. Doesn't matter what strategy you're using, what ICT, SMC concept you're using, it's all about probabilities and having that in your favor when you develop a model and an edge. So in these videos, I want to be realistic. A lot of gurus talk about these things, but they don't happen all the time, and they make it to seem easier than it actually is. Trading in itself, learning a strategy could be easy, I do agree, but applying that and finding your edge is tricky because there's all these little, price signatures that you could look for. And unfortunately, my belief with trading is that mechanical is not always going to work, right? And this is mechanical. What we're talking about today is mechanical. You're looking for a particular liquidity pool to be swept and a reaction from that. Is it going to sometimes fail? Yes. Are you sometimes going to have, a very similar setup and it fails in a macro? Yes, but it happens more often than not, which is why I'm talking about it. And then you guys can, take that in the future and apply it as necessary. Now, let's look at another example of sweeping previous day liquidity. We talked about this at the very start. It happens, right, multiple times, at least once a week. At least once a week, I believe. Now, look at this, right? In the example below, I'm just going to zoom in a little bit. Look, you can see we come down and we sweep this previous week liquidity, and we've talked about this in previous videos. I've got a video about accumulation if you haven't seen it already. So if you go on my page, you go to the home page, it's called the Full View Free Mentorship. Again, 10 videos, everything there is free, right? These are 10 things that I've pulled out from ICT that I personally have used or use currently. I believe they're the 10 most important things, right? If you're going to either build a model or learn concepts, that's what I'd say. Now you can see all this low resistance liquidity at the top here. We've come down, we swept this previous day low. Again, previous day low. Another important point to mention is that we sweep it during the macro. Again, keep that in mind. Then we simply wait for the price signatures to indicate a reversal and we target the opposing liquidity. It's as simple as that. This is the mechanical style of trading. So again, here, we've zoomed in a little bit. We've swept this previous day low. We've got a market structure shift. We've got an inversion created. And in this case, look, we don't return. So here's the thing that I love about inversions is that it gives you an opportunity to get involved in the market without, right? Here's the thing, without being like, okay, I can't get involved because I need to wait for a return to a fair value gap. It's not always going to happen like that, guys. Please, please, please keep that in mind. So what you're looking at here is looking at a sweep a sell side, a market structure shift and inversion. Your entry could come there. We don't return, therefore maybe you're in with light size, but it moves and moves and moves and moves and it moves very quickly, which is sometimes what happens in these market conditions. Again, it's just one of those things to consider, guys. When you're looking at these generic setups, you're going to see these things play out time and time and time again. So in summary, guys, I just wanted to go over the two main things that I've seen, right? Sweeping of a previous day or previous week low or high, or sweeping of Asian liquidity. Now, for those that are still here that trade the New York AM session, what would be an equivalent type of trade? What would be an equivalent thing for you guys? Sweeping the previous session's liquidity. So if you trade, for example, the New York AM session, sweeping the London low or London high and looking for a reaction from that during a macro, for example, that is the same. It's exactly the same thing, right? So if you're here, if you're still here in the video, let me know. Comment down below, right? Generic ICT setups, just so I know who's here. I really appreciate everyone's support because a lot of effort has gone into making these videos. Not only do I make the PDF, but I record the video for you guys, and it's available for you guys too, all for free, right? So after these 10 videos, I'm gonna try a different style video, different style format. There's a lot coming to the channel too, guys. So again, Full View Fridays is coming. I'm just trying to logistically organize how it's gonna work. And again, I see you guys, I see all the regulars, all the new guys that have come. I appreciate all the support. Again, if you enjoy this, let me know, give this video a like. It really, really helps the channel, or comment down below any questions that you have. And until next time, guys, I'll talk to you then. Peace.